Imagine striking a deal that builds a nation, generates billions in profit, and cements an American corporate empire in the heart of West Africa. Now, imagine watching it all crumble. In the world of billion-dollar resource extraction, empires don't always fall overnight. Sometimes, they bleed out over decades. From a mid-century aluminum megaproject that was supposed to change Africa forever, to a modern deepwater oil boom that turned Ghana into an energy powerhouse overnight. This is the story of how two massive American business ventures in Ghana soared to unimaginable heights, and exactly how they came crashing down. When we talk about billion-dollar deals between the USA and Ghana, we aren't talking about tech startups or retail chains. We are talking about the raw, massive extraction of Earth's most valuable resources. And in this game, a business rarely falls down in a sudden, dramatic bankruptcy. Instead, the fall is a slow, agonizing transition. It goes from a golden era of massive profits to severe decline, bitter political disputes, and eventually, a quiet exit by the American giants. Today, we look at the two most defining U.S.-Ghana ventures that perfectly fit this spectacular rise and painful fall. Our first story takes us back to the late 1950s. Ghana's first president, Kwame Nkrumah, had a vision to industrialize the newly independent nation. He partnered with U.S. industrial giants Kaiser Aluminum and Reynolds Metals to build the Akosombo Dam on the Volta River and the Valco smelter. Adjusted for inflation, this was a billion-dollar megaproject. And at first, it was a massive success. Valco industrialized Ghana, created thousands of high-paying jobs, and made the country a major player in the global aluminum market. It was the crown jewel of post-colonial African industrialization. But the fall was built into the foundation. The U.S. companies were granted incredibly cheap, subsidized electricity. Over the decades, this starved the local Ghanaian grid of power and became a massive economic burden. Kaiser Aluminum faced its own financial struggles. The Valco plant suffered from mismanagement and deadly environmental disasters. The relationship turned bitter. The Ghanaian government fought to renegotiate power tariffs. The Americans fought to protect their margins. The final blow came in 2014. After decades of disputes, the remaining U.S. stakes were completely bought out and sold to a Russian and UAE-backed consortium. The American era of Ghana's biggest industrial business was dead. But history has a habit of repeating itself. In the 21st century, a new billion-dollar venture emerged, Deepwater oil. In 2007, U.S. company Kosmos Energy, backed by private equity, struck a massive discovery in Ghana's offshore waters. Anadarko Petroleum soon joined. Billions were poured into infrastructure. When production started in 2010, Ghana was transformed into a major oil exporting nation. The economy boomed, and the U.S. companies were printing money from one of the most prolific deepwater fields in West Africa. But the fall was coming, triggered by geopolitics and market crashes. In 2014, a massive maritime border dispute erupted between Ghana and Côte d'Ivoire. The International Tribunal ordered a halt to all new drilling in the disputed area. This froze U.S.-led projects for years, costing billions in delayed revenues. Then, the global oil price crashed in 2014 and again in 2020. The high cost of deepwater extraction made the projects financially unviable. Unable to sustain the pressure, the Americans retreated. Anadarko was absorbed in 2019. By 2022, Kosmos aggressively sold off the majority of its stakes to the Ghana National Petroleum Corporation. The U.S. dominance in Ghana's oil sector fell from a booming monopoly to a minimal footprint. So, why do these U.S. mega businesses inevitably fall in Ghana? Looking at both Valco and the oil boom, a clear pattern emerges. First, resource nationalism. Once the infrastructure is built and the resource is proven, the host government faces immense domestic pressure to renegotiate terms and take a larger state share. This destroys the original profit models of the U.S. companies. Second, geopolitical and legal risks. Border disputes and shifts in international law can freeze billion-dollar assets overnight. Third, shift in corporate strategy. U.S. companies are publicly traded and answer to shareholders. The moment an African asset becomes too politically fraught or unprofitable due to global market shifts, they will sell their stake and exit rather than fight a losing battle. If you enjoyed this breakdown of global business and history, hit that like button, subscribe to the channel, and let me know in the comments what other mega corporate falls you want us to cover next. See you in the next video.